Well, if you see, since December, Brent crude has moved up by nearly 24%, and if the estimations of foreign brokerages are to be believed, then this prices could move up further in the coming time period. However, despite this rise in crude prices that we have been seeing, the price of retail fuel, that is petrol and diesel, has remained unchanged in the country, and this is despite the fact that petrol and diesel prices in the country are unregulated and should change on a daily basis. Now, if you see, petrol prices have remained unchanged since December 3rd, while diesel prices have remained unchanged since November 5th. So what could be the possible reasons behind this? Firstly, it could be because oil marketing companies were already earning a higher gross marketing margin on sale of every liter of petrol and diesel, and now at this point they have decided to take the impact of this rising crude prices on their own books and not pass it on to the end consumers, and hence we have not been seeing this rise in retail fuels, that is petrol and diesel. Or the second reason could be the upcoming election period in the country. Even in past, we have seen whenever there are important state elections or general elections in the country, retail fuel prices, that is petrol and diesel prices, have remained unchanged for a very long time period, despite the fact that Brent crude at that time was on an increasing trend. Now, because of this, the financials of the oil marketing companies will be impacted. Now, along with petrol and diesel, if you see, the prices of LPG, which is used for domestic consumption, has also remained unchanged since October 6th. So far, the only price increase that we have seen is in prices of ATF fuel, that is aviation turbine fuel or jet fuel. Now, that has increased by nearly 7% since December. Now, this rise in crude prices also impacts India's import bill, and that is because India imports nearly 85% of its crude requirements. And if you see, based on our calculation, every $1 increase in crude prices inflates or increases India's import bill by nearly 1.9 billion US dollars. And this is based on the FY20 numbers, because consumption at that period was near normal. And if you see the latest numbers in the first 8 months of financial year 2022, despite only 11% increase in crude import quantity, the import bill has actually increased by nearly 120% compared to last year for the country.